Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. For a change, the action here is becoming clearer than the one in Chicago wheat, which has not always been the case. The origin of the most recent move up was not a key reversal up or outside day. Rather, it was how the market headed into that maelstrom of support below, stretching from 1024 downwards, that caused the market to halt its decline and gap higher just the once in early April. Prices continued rising, though the recent 50% through the 50% Fibonacci line at 1146, which at the time was surprising given how it had acted as a brick wall overhead back in mid-March. But then the market started to falter at the recent 61.8% Fibonacci line at 1183 and head back lower last week. However, the initial move was, shall we say, limited, as prices have barely managed to get below the 50% Fibonacci line before we saw the first reactive move back up on Friday last week. Yet we have now seen a case of 2 steps up and then 3 steps down, as the same 61.8% Fibonacci line at 1183 capped the rise this week, a week made up of 2 indecisive spinning tops and a bearish closing black Mariposa yesterday. That importantly closed below the 50% Fibonacci line at 1146. This set up the scene for what has happened today, the resistance of the 50% Fibonacci line overhead against the rising lower time, currently at 1137 of the early February to late March bullish shift pitchfork. And it looks like it is the lower time that is to suffer, or at least be very heavily tested. Prices have today dropped down to the next, not so great support of the very recent 38.2% Fibonacci line, the same Fibonacci set as previously mentioned, and that's at 1110. Below that, the support seems limited until a huge band of support below that starts from 1017 and extends lower. One final quick point, and it's something that I said last week. If this market does not manage to maintain the 50% Fibonacci line or the rising lower time, which seems increasingly likely, then I am quite prepared to draw my first bearish Andrews or shift pitchfork here for quite a while. Minneapolis wheat. Please ignore the color change in the labeling. It is just my charting system playing its usual silly buggers. There is no special significance in the colors. Okay, so I'm very pleased to see that the March 2021 to January 2022 bullish Andrews pitchfork is here, still alive, well, and pointing the bullish direction of this market, unlike some of the others in Chicago and especially Kansas City. The most recent move higher was created from the double bottom formed over March, which after a lot of hesitation, toing and froing of action, in one case going to the 5th countering degree, saw prices move higher. The market is now running along the top of the middle time, currently 1169, of the bullish Andrews pitchfork, having tried, but so far failed, to make a new high as yet. The April 2008 high at 1166 provided inconclusive resistance, which was broken this past Monday. We next have the resistance at 1209 from March 2008, which has so far been a useful piece of resistance, having capped the market back in early March. Meanwhile, we have really nothing of note of support until the March highs at 1114 to 1115 area. I am not tempted here, as I have been elsewhere, to draw a bearish pitchfork for the March to day action, but it's prudent to be reminded of these elsewhere nevertheless. So, until another pattern emerges, follow the bullish Andrews pitchfork and the middle time especially. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.